What's up, everybody? This is Antonio here to bring you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 a week. So in these videos, I do pull up the companies you guys do provide. So this is the current list right now. So if there's a one that I haven't covered in the past or has changed a lot, let me know. I'll be happy to add it to the list. We'll eventually get to it. But in these videos, we'll pull up the company on Seeking Alpha, look at the company profile, read a little bit about them, then look at the charts, see how their performance has been, then look at the dividend summary, pull up the calculator, crunch some numbers, see how much of this company you would have to have invested to make $1,000 a month, $100 a month, and even $100 a week. And then we'll wrap up the video with looking at the dividend yield on cost. Seeing when the best opportunity is currently or was in the past to enter the stock for the dividend yield. So the one on this episode today, guys, it'll be HTGC. So if I pull it up on Seeking Alpha, you'll see here that we do have HTGC, which is Hercules Capital Inc. Currently trading about $16.26. Let's go ahead and pull up the company profile. We can read a little bit about them. So Hercules Capital Inc. is a business development company. The firm specializing in providing venture debt, senior secured loans, and growth capital to privately held venture capital backed companies at all stages of development, from startups to expansion stage, including select publicly listed companies and select special opportunity lower middle market companies that require additional capital to fund acquisitions, recapitalization, and refinancing in established stage companies. The firm provides growth capital financing solutions for capital extensions, management buyouts, and corporate spinouts, financing solutions, and there's a lot more, but we're just going to read it up to there. They are in the financial sector. Industry is asset management and custody banks. And then it's not showing anything for employees, but they were founded back in 2003. So they've been around for at least 20 years or so now. You can actually look at their website at htgc.com. Let's go ahead and pull up the charts here. So if we look at this, if we look at the year to date, they are actually up by 24.21%. On the 1 year, they are up 39.90%. On the 5 year, let's look at this right here. They are up by 39.66%. A little bit better than majority of the other companies we have covered in the past, but on the 10-year, guys, they've only been up 15.70%. Not the best return in 10 years here. And then since they've been publicly traded, they've only been up 37.90%. Not the best return there. It goes all the way to about 2005 is what this chart's showing. But if we look at the 52-week range, you'll see that the 52-week low is $10.82. 52-week high is $17.97. It's trading closer to the 52-week high there. EPS is 1.98. PE is an 8.21. The dividend rate is $1.60. Yield is a 9.84%. And then the market cap is a $2.43 billion market cap for this company. If we pull up the dividend scorecard here, you'll remember that they are in the financial sector. You'll see that the dividend yield is at 9.84%. So quite a large dividend yield there. You'll definitely want to make sure that it's sustainable. Annual payout is $1.60. So for every share you do own annually, you'd get $1.60 from them. Payout ratio is on the higher end of 82.35%. And then on the 5-year CAGR, they have been growing their dividend for about 6.39% in the last 5 years. Dividend growth here showing 4 years only. Seeking Alpha has been known to have this value incorrectly. Dividend frequency, they do pay out quarterly, which they would pay you out 40 cents every single quarter per share that you do own. So let's go ahead and pull up the calculator. We can see how much we need to own of this company to make $1,000 a month. So that's the first one. So we want to make $1,000 a month. There's 12 months in a year, so we multiply it. So annually we do need to make about $12,000. You'll take those $12,000 divided by the annual payout that this company pays out, which is the $1.60. This will actually give you the total number of shares that you do need to own to achieve that amount of money that you need to generate. And then if you take that 7,500 multiplied times the current share price, you'll see that we'll get about $121,950. $121,950. Sorry about that, guys. But yeah, that's quite a bit of money there. Definitely, especially at the 10% dividend yield, you could get the dividend cut there, but you'll definitely have to do some more research on that. But it only requires you about $121,000. Quick way you can do this is take the $12,000 you need to make. You can divide it by the dividend yield here. So that is 0.0984, and you'll see we roughly get about $121,000 as well. So let's go ahead and do the next one, which is $100 every single month. This one's a little bit more achievable because you do require a lot less capital. You could actually take the previous answer divided by 10 and that'll give you the solution. But since we have the calculator and maybe some people are interested in knowing the math behind this, we can go ahead and just walk through it. So $100 is what we want to make, 12 months in a year. So annually you need to make $1,200. Again, divide that by the amount. I accidentally put multiplication, but let me fix that. So $100 times 12. Oops. So $100. I apologize for that, guys. So $100 times 12. Annually, you need to make $1,200, and then you'll divide that by the $1.60, which is what they pay you annually. So total number of shares you'd have to own is 750 shares there, and then you multiply that times the current share price, which is the $16.26, which in total you'd have to have about invested about $12,195, and then you'd be roughly making about $100 every single month. Of course, they do pay out quarterly, so you'd get paid about $300 every 3 months or so, and you just divide that by 3. But quick way to calculate this, take the 1,200 divided by the dividend yield, guys, and then you'll see that we roughly get about 12,000 as well of what you'd have to have invested in this company to make about $100 a month. Let's go ahead and do the last one, guys, which is $100 every single week. That would be pretty nice there. So $100 every week. There's 52 weeks in a year, so annually you need to make $5,200. Divide this by the dividend yield, which is $1.60. Total number of shares you need to own to achieve this is 3,250 shares. Multiply times the current share price. One of the things about this is if you invest in really great companies and you know, it requires a lot of number of shares and they have a nice 5-year CAGR, you actually just need time on your side. All of that will compound. You would require a lot less capital, but anyways, multiply this times $16.26. So in total you'd have to have invested in this company about $52,845, and you'd be roughly making $100 every single week. The quick way to do this is take the 5,200 you need to make annually divided by the dividend yield, and you'll see that we do get about $52,000 as well. That's pretty sweet, guys. Quite a bit of money, but definitely not sure about the dividend yield. You'll definitely have to do some more research on that, make sure it's sustainable, because usually anything above a 3 or 4% is very questionable. See if it's sustainable or not. But let's go ahead and wrap up this video by looking at the yield on cost for this company. All right, guys, so we're here at the dividend yield for the company, and you'll see that this is the dividend yield. It'll fluctuate over time. This is the past 5 years, and if we look here all the way to 2018, they had a dividend yield of 12%, 11%, somewhere around, fluctuating. Back in the 2020 crash of March, you'll see that it did spike up all the way to about 20 something, 22 or so, and then it's been coming down in 2020, been coming around 8-9%, and in 2022 started going back up to about 19% or so, and then slowly back in 2023 it's been going back down. So definitely an interesting dividend yield for this company. Let me know in the comment section if you are invested in this company. Do you plan to invest in it, and why? Do you think the dividend yield is sustainable or not? And then don't forget to let me know any other companies you guys are interested that you didn't see on the list. I'll be happy to add them. We'll eventually get to them, but don't forget to subscribe with that notification. Definitely would appreciate it if you guys help me reach that 20,000 subscriber mark. Definitely goes a long way, especially if you do drop a big thumbs up. Costs you nothing. And I will talk to you guys later. Take care, stay safe out there. Bye guys.